Atul Chaturvedi joins us now, Executive Chairman with Shree Renuka Sugars. Let's understand from him about the importance of the new GST rules and what it means for sugar companies. Mr. Chaturvedi, good morning. Thank you for joining us. Can you first clarify for us, for the benefit of our viewers, that this new GST rate change, does this apply to standalone refineries? Because our understanding is that for OMCs, the rate already was low.
A very good morning. No, what you're saying is absolutely true. The rates were revised sometime in 2018. I believe it was July of 2018, from 18 to 5%. And now what has been done is the private sector refineries like Nayara or Reliance, they were probably kept out of the loop. And their contribution to blended ethanol was relatively lower. So I think just to extend the reach of blended fuels, direct buying by these refineries can also come into play, and that should be positive for the sugar sector and the companies which are manufacturing ethanol. It's a positive move.
Yeah. Do you think it's just an incremental move, or this is going to have very powerful implications for the sugar sector?
No, I would say it's an incremental move because in any case, the ethanol which is available as of today was already with 5% GST. But now additional incremental volumes can come in from the private sector, and they will also become part of the whole loop.
Okay, so it's an incremental move. Mr. Chaturvedi, ethanol pricing is another concern for the industry, and recently the ISMA president requested the government to increase the ethanol prices as the prices that have been fixed by the government aren't enough. Anything that you're expecting here, or what's your wish list, if I may?
Oh, our wish list will always be a long one, but I don't think there's anything on the cards as of today, because the government recently only increased the ethanol prices. So I'm not too sure whether anything is in the pipeline as of today. But definitely industry has been demanding that the price should be closer to about 69 for juice ethanol, which currently is in the region of about 65 rupees to a liter. So it is definitely a demand. And hopefully at some stage in the future, the government will probably look into it. But the other thing which we thought government should look into is that the supplies of ethanol during the season, during the off-season when the crushing is over, that needs to be incentivized. And hopefully the government may be looking at this closely, because off-season the supplies actually start dwindling, with the result that at some stage we were at 10% blend, and then subsequently for the full year, the blend came down to about 9.5%.
We, in fact, last week had seen all the sugar stocks hit a sweet spot in trade. There's some expectations of industry also expecting a higher quota limit when we talk about exports capped right now till May 2023. All the burning issues here are being discussed on ET Now. Mr. Chaturvedi, thank you so much for your time.